So you want to know the secret 2 tools that nobody knows about in trading that will accelerate you to become a profitable, a soon-to-be millionaire trader. I'm going to show you exactly how to determine price moves, how to know just where price is going to go overall. How are you going to know where price is going to go bullish? How do you know when it's going to go bearish? These 2 tools are going to exactly show you what you need to know. And these 2 tools are not indicators. These 2 tools are simply the best tools you're just going to need overall ever in your whole trading career. With that being said, if you're ready to go ahead and take this on, let's go ahead and jump right in here. If you enjoy this video, hit that like, hit that subscribe button, guys. I'm here with you all the way. I invite you, by the way, down in the Discord in the link below to join the community and overall ask me questions as well, and just to get familiar with the community. So if you want to be involved in that, please go down in the description below and hit that link. So with that being said, let's go ahead and jump right in here on the 2 tools you're going to need forever in trading. Alright, so we're going to go ahead and start off here exactly price legs. So price legs are going to determine if we're in a bullish or bearish structure. We're going to measure the high to the low or to the low to the high. Depends what if we're bearish or bullish. But we're going to measure the low to the high to see where price can retrace to continue and rally higher, for example. So I'm going to show you exactly how to do that. And as you can see, so we had this consolidation area in the 1 hour time frame, followed by a nice down candles here, creating a low to a high to a low, now to another high. Now it looks like we're retracing a little bit. We're going to identify a pullback. So we have our pullback and to a high. So we have a low to our high. As you can see, when we go ahead and use your fib retracement tool on the bottom to the top of this tool, price rejected off from it, and now it is actually rejecting off what? Our 0.79 level. This right here is called our OTE. So once you measure out that price leg, basically what we're looking at is that low to the high, measuring that for price to retrace and bounce off from what? This is called our OTE area. For those who don't know, OTE is exactly just the low to the high right here. Boom. 0.5 to the 0.79 area. This is our OTE, where price could actually bounce from, and look at it's respecting it here. On the 1 hour, this has a nice bullish candle up, and price now is where is it attracted to? Well, it's attracted to this fair value gap now. I want to see price come up and reject off from this fair value gap, or go through this fair value gap, hit the high. So you can kind of use a price leg to determine your next structure, bullish structure or bearish structure. All right, so here is a bearish example for the price leg. As you can see, we have a high to a low. We're overall pretty bearish here, right? We have a high to a low, pretty bearish. So what we're going to look for here, we're going to identify the price leg between our low and our high, but instead of going to low to high, that's actually measuring bullish. So we're going to start with the high here to our low. Where is price expected to reach before it continues lower? Well, I want to see price come up and continue down to this low potentially, because we're with the trend, our 0.5 level to our 0.79 level. We're going to go ahead and see exactly what price does. What does it do? Well, price comes up into that level. We got a nice rejection candle. Let's see what happens. Price rejects from this area. This is our OTE, right? So we have our OTE as well. It's respecting what else? It's respecting this fair value gap. So with the price leg, you could ensure yourself that you're going to get a good bias, considering, okay, price retrace, where could it retrace to? Since we're in this trend, price is going to retrace to this area, then reverse, correct? So basically, that's where you're kind of leaning towards for knowing how the markets move and exactly how you could determine when the markets move because of this simple action here. This is just measuring the price leg. Also, there's a thing called equilibrium. So I do want to get an equilibrium. It's the same, almost the same thing as a price leg. It's for equilibrium. It's literally just the same thing, but it's a 0.5 level. So what I want to get into next, after we know the OTE zone, which is our price leg with our fib, right? From our 0.5 to our 7.9, we want to identify just equilibrium. So I'm going to use a Gann box for this one. This is my equilibrium tool. All it is, you could use the Fibonacci again. However, I do like to have my Fibonacci set to the OTE, and then my Gann box just says 0.5, which is my equilibrium. So I'm going to go ahead and go to my settings, and all I have for my style is just the 0, 1, and the 0.5. Background is off because I don't like the background. What we're going to go ahead and look for, basically, when it comes to identifying market structure, right? And where the markets obviously want to move. Well, we're in this trend again, this bearish trend. We're going to identify this time with our Gann box the high to the low. Okay? So basically, since we're in a downtrend, we had that retracement up to our OTE from earlier, right? What we're going to basically look for here, to go short, you want to be in the premium zone, right? To short. So I'm going to measure this out here. So I'm going to consider this as my red level, which is our selling level. Basically, what I'm determining, right? Since we have this overall bearish trend from earlier, followed by consolidation, bearish trend, price came up, retraced it into the OTE, but this is also considered now our equilibrium. So once you see price go past that 0.5% mark, you can tell yourself, cool, now we're inside a premium. This is a good place to go short, right? This right here, you don't want to go short in a discount, right? So this right here would be shorting in a discount. You don't want to short in a discount. You want to short in an obvious level of a premium. So if we wait for price to retrace, which is an OT level in here, right, followed by this bearish fair value gap, price is obviously bearish now, right? Price is obviously bearish. So this is exactly where we want to go short. Retracement right there of the candles. Our stops will be above these fair value gaps, these inefficiencies, targeting another inefficiency. Look at, we have this bullish fair value gap. We can go ahead and target this. Price then slaps that area. You see, so we're shorting in our premium zone to our discount zone. We're going to have our targets inside the discount zone because price could retrace from the discount zone to go premium again. Does that make sense? So basically, that's exactly what equilibrium is. Once price comes up, breaks, or crosses that 0.5 mark right there, that's how you know you're going to be in an equilibrium, right? You're going to be in a premium zone now. All right, so I'm going to go ahead and show you another example for right now. As you can see, we're in a nice downtrend. All right, do we want to go longs or shorts here? Well, just because we're in a downtrend does not mean we want to go exactly short. We got to see around there and see, do we have a market structure shift? Well, look at, we have a high to a low, right? High to a low. We have another high here, relative equal highs here. Higher low this time. That right there, right, is another sign of bullishness. What we want to see is a break above this high. This is going to indicate, well, we did get that, right? This is going to indicate a market structure shift. Now it looks like we're going to be reversing to a bullish structure. So now what I want to do is identify, cool, now we're going to be in a bullish trend. That's how we know we're going to be in a bullish trend from a bearish trend. Because of that reason, we have a low to a higher low. However, we want to see that market structure shift, which we did get that. Now what do we do? Well, what we're going to do, we're going to go ahead and use our Fib retracement tool on the low to the high. Remember, this zone here is our OTE zone. So we're going to go ahead and do this. Once price comes into this area, I want to go ahead and see price bounce off from this area. But before we do, we also want to make sure before we buy the market, we want to make sure we're in an equilibrium. We're going to go from the bottom to the top, boom. All this right here is our indication that we could go long here because we're in a discount. Because we're measuring that low to high, we're going to hit that equilibrium level, which tells us, cool, we should bounce off from this area because that's what smart money wants to do. Smart money wants to bounce from areas where it's in a discount or a premium. Targets and our stops, I'm going to put my stop down at this low. All right. Now our targets are going to be at this high. So why did I put my entry here? Because it is inside of what? Discount zone. So now before we enter, right, of course we still have our premium zone here. We don't want to buy in our premium zone. So we're going to go ahead and wait for price to pull back in here on a smaller time frame to give us an entry. So now since we're on the 4 hour, let's go ahead and go down to maybe the 15 minute. As our OTE in equilibrium, this could develop a strategy here that you could literally use to get an entry on the smaller time frames here once price reaches into this what? Discount zone. Let's see what happens here. We're going to wait for price to hopefully get inside the discount area. Look at, boom. What'd it do? Well, it's in our discount zone. What else do we have back in the past? Well, we're inside of what? This huge fair value gap, right? So this is more indication that price is likely to reverse upward from. So our entry would have actually been, right? Would have actually been at this low here, right? At this low, right when it entered our discount with our stops at these lows here. Okay? Boom. Targeting what? These highs. Because the market is attracted to highs and lows in the markets based off the direction and based off smart money, we're likely to go ahead and hit these highs. But before we hit those highs, what do we got to do? We got to rebalance these fair value gaps here. You see these fair value gaps? We got to rebalance those areas before we go ahead and continue. So we might have some struggling price action here like this before we reach what? These highs. Okay? So that's what I'm kind of looking at here. So let's go ahead and see what happens. So say if we did buy the market, right, at that low, let's just say we put our limit order there. We actually did buy the market here. What we're going to look for is basically price to go ahead and fill in these imbalances or use these as support to continue higher to these highs. Let's go ahead and see what happens here. As you can see, you see how price is filling in those imbalances. Remember, based off our trend, based off that market structure shift that we had, based off different confluences, we know we're bullish because we're inside of what? This discount zone. So let's go ahead and see what price wants to do. Now, I'm exactly telling you what it's doing here. Price is a little choppy here. What did I just tell you? Let's go back to the 1 hour. Let's see where price is attracted to. Now let's see if we hit this high, these highs up here. So far we did hit this high. This would be a partial. I would sell one contract at this high. And now, once price hits what? This high up here, this is going to be another contract coming. And then our last take profit, full take profit would be up here at this high. We're going to see if we reach these levels here. Boom, there you go. Right there would it be another partial. We're going to sell another contract. What do we do now? Our stops would have been down here from earlier, right? However, now we can go ahead and stop that break even or at another low. For example, like this low here is a good stop loss point. This is a risk-free trade. Now, let's go and see what happens here. We already took those partials, so we know we already locked in profit. When it comes to trading, it's all about taking partials and taking profit as you go. As you can see, we got stopped out here at this low. Looks like it is going lower, as you could see. So that would have been a nice trade there using the what? Equilibrium technique with our OTE zone. Price came in the OTE area here, which is that darker green shade of green here. All right, price come up. This is our equilibrium. This is where you buy in our what? Discount zone. This is exactly what you're going to need to do here, guys. This is exactly where you're going to want to see here. Using this amazing technique, this right here, you could develop this strategy that can make you tons of money. Pretty simple. Buying, smart money is buying. These banks and corporations are literally buying inside of what? Our discount zone. This is our discount. Now, from that discount OTE zone from earlier, let's see how price reacts to this zone. Look at it bounces right off. Balancing what area? What is it balancing? These fair value gaps. Okay, after that, where's it likely to go? Hit this high, hit this high, or we could reject, hit this low. Look, it hits these highs. Because we're in a discount, it's another draw on what? Smart money. That's a draw on smart money. Pretty dang awesome and simple right here. If you use this, you can make a lot of money down the road and apply this in your trading, because no other trader is going to be showing you this right now for free. I'm going to be the one showing you this for free, and you're the one who needs to apply this. Well, if you have to watch this video again to understand this, totally okay. That's what I did. I try to watch every video. Nobody would tell me the good shit. Okay? On a serious note, nobody would tell me the good crap. And I'm going to say to you right now, this stuff right here is what you need to learn and what you need to know in order where smart money is buying from. Chart patterns don't work. None of that bull crap don't work that they teach early on traders. None of that works. Okay, chart patterns are a trap. Smart money uses patterns to trap people and to stop them out before continuing the opposite direction. Have you ever gotten in a trade that using a chart pattern and you literally got stopped out, you got faked out, or you got stopped out because of what? Because you're using chart patterns. Smart money doesn't care about chart patterns and wants to punish the people in chart patterns. They don't work. Indicator traders don't work. They're not going to work. The only thing that's going to work is you understanding smart money, and this is exactly the way and how you're going to become a profitable trader, by trading smart money. You want to trade with the smart money, not against the smart money, if that makes sense. So you basically want to identify our discount zone. You're going to buy in discount, sell at a premium, okay? But you want to identify a clear price leg along with what is market structure doing, right? You want to understand what it is doing. So we have this market structure shift right here, right? In our premium, then discount. Boom, taps our discount. Continues, rallies higher. This is our trade. That's exactly what I would have took right there. Longing in our discount zone. Pretty dang simple. So if you want to use this, and if you want to identify literally how the market moves and how you want to know if the market moves, you're going to use this technique here. All you're using is our OTE with our Fibonacci tool. And then all you're using is our equilibrium. Bullish, you're going to measure out low to high. If you're bearish, you're going to measure out high to low. And boom, this is all you're going to need, you guys. And with these two tools here, these are the best tools here you could use in day trading forever. With that being said, everything I just showed you right now is amazing for you. If you came across this video, and if you watch this the whole way through, most people in the world have never even heard of anything like this, and you know more than 99% of traders just by watching this short video here. Just watch this video again. If you don't understand it, if you do, awesome. Go ahead and start implementing this into your trades, because this is going to make you a fortune and get you that Porsche, whatever the heck you want in the world. Okay, money for you is going to be irrelevant. You can just do whatever the hell you want to do in life at this point. I'm giving you this crap for free. So go ahead and hit the like, hit that subscribe button, guys. I'm here with you all the way. If you enjoyed this video, hope you guys enjoyed. Join my Discord down below. It's for you to join the community and be involved so that you can make ultimate gains, guys. With that being said, hope everybody has a great rest of your day. Trade on. Peace out. I'm here with you all the way. Peace.